Hello friends, this is Raj Sastry from Raj Option Trading. Today is November 28, 2021. Let's talk about selling put options. Selling put options is a great income strategy. If you do it well, you can generate a consistent monthly income. With that, let's jump in and get started. As you look through here, seller of a put option will make money if the underlying stock increases in price, stays the same, or decreases slightly. That's why a lot of people are attracted to selling put options because there are a lot of probability to make money here. So that's why a lot of people are doing this put option trading for living. So with that, let's jump in here. So when you are a put option seller, your outlook is bullish. You want the stock to go higher. Your risk is unlimited, equating to strike price less the premium you received. It's theoretically not unlimited. It's limited to the strike price minus the premium that you receive, and maximum reward is the premium that you received. That's why there is a cap here. Your maximum reward is capped to the premium that you received. And this can be combined with other strategies, like if there is a huge stock with a nice price, think about like Apple or Tesla. You can do a vertical spread instead of doing a single leg, which is more risk. You can do a vertical spread, so that way you can take a slice of maybe $10 or $20. Your risk will be limited that way. It's also called defined risk type strategy. So with that, you got to look out for certain things here. You have to make sure implied volatility, or IV percentile as we call it, is high. That's when you get more premium for selling these put options. And you got to identify a clear area of support, so that way you don't burn yourself. Clearly identify area of support here, and make sure you sell the put options above or just above or at the area of support, or just below. And make sure there is at least make sure at the most there is 45 to 60 days to the expiration. You don't want to take too much risk out in the future, but 45 to 60 days is a good period here. That will give you maximum theta decay, and there is a probability of making money here. And passage of time, or we call it theta decay, is your friend here when the stock price is above strike price. When the stock price goes below your strike price, then theta decay will become your enemy. And look at the delta around 15, or probability of touch around 30. We'll look at this as we look at few examples. And avoid stocks with a heavy debt load here. That way, you look at stronger candidates. So with that, let's jump in here and look at when not to sell put options, and when to sell put options. So from a when to sell perspective, best time to sell put options is after a negative news, and implied volatility typically jumps up. Think about like a earnings miss, FDA rejection. That's one of the good time to sell put option here. And also look at the growth stock with a temporary weakness. That's when you sell some put option where we have an elevated IV percentile. And look, also I love to sell put options on the favorite ETFs when the market drops big time. Like, on Friday, market dropped big time. That's the time to sell put options on ETFs like QQQ, SPY, IYR, IBB, and so on and so forth. So at this time, you can sell deep in the money type put options with a nice premium. That's a great time to sell. And these are relatively stable ETFs with a lot of stocks in their basket. Don't be afraid of option assignments. A lot of people try to sell for a loss. Instead, if you have some money, don't be afraid of option assignments. That could be great opportunity for you to buy a great stock at a good price. Lighten up when the market is up. This is one very important thing around the inventory management. When you sell put options, you can easily get carried away, try to make maybe a few extra dollars here and there. Instead, lighten up when the market is up, so that way you have more money to buy when the market is down. That's very, very key here around the inventory management. And from a don't perspective, bad time to sell put options after accounting scandal. You don't want to bet on a company that's really cooking the books here. and stock with a consistent deteriorating performance. If the stock is a lower low all the time, don't bother with it. Look at some good candidates with a nice higher high type scenario. Avoid options with the low open interest and high bid ask spreads. That's why volume is key here. You got to look at higher volume plays here. Don't go after lower volume candidates. Don't take on too much margin. It's not worth it, because when the market tanks, you'll get margin call, especially the put options. At the market tanks, you will end up holding more collateral, or maintenance amount, which is not fun. That's why don't go on too much margin here, and buy back the options when you reach around 50% profit level here. That way you have some money when the market tanks like Friday, to put some money to work here. So with that, let's jump in here and get started. As you look through here, we got few great stocks here. We got Pinduoduo, VMware, GPN, which is Global Payment Networks, Visa, Alibaba, InMode, which is one of my favorite stock, Activision, Blizzard. These are some great stocks. You can sell some put options and make some money. Let's jump into this in a little more detail. As you look through here, selling put options is an income strategy. As you see here, if the stock price is around $40, which is the current price here, look at selling put options maybe around, say, $30. That's where you find a nice area of support here. So you sell the put option at $30 here, and for that you collect around $2. So you'll collect $200. Make sure you're selling it 45 to 60 days out, so that it's not too much in the future. So your break-even point is really the money that you received, which is $2, minus your strike price, which is $30. That's $28. That's your break-even point. If the stock moves below the break-even point, you will lose here. That's your loss zone. But if the stock goes higher and higher, say above $30, that's your profit zone here. Your profit is limited to the money that you received, which is $200. So that's the beauty of put option here. If the stock goes a little bit lower, in this case from 30 to 28, or it goes higher or stays at 30, there are three probabilities where you can make money. That's why folks are attracted to put options as an income strategy. You can make a good living if you don't take on too much margin. That's why a lot of folks are attracted to this. Let's jump in here. One thing I always love is, when the market sells off big time, we should be looking at some great ETFs to sell put options. Here, what I've done is I've sorted out some ETFs where volume is greater than 5 million shares traded and implied volatility percentile is high. As you look through here, we got here great ETFs here. IWM Russell 2000. Look how your percentile is, where is it, 100 here. That's too high. And we got few more here, EFA, EZU, and so on and so forth. I like to trade ETFs like, let's see here, I think it's not here, IBB, and XBI, QQQ, SMH. Some of those are my favorites here, and some of these also will work. We'll look at few examples as we go forward. The key is really when the market tanks big time, even a popular ETF like IWM gets a high IV percentile. That will give you opportunity to sell some put options at a deep in the money, deep out of the money put options much below the current stock price, and make good money. With that, let's jump in here. Look at some stocks. So as you look through stocks, we got a lot of choices here. I want to make sure we got good candidates. So I filtered out saying, hey, give me volume greater than 1 million shares traded, high implied vol, so we can make some good money here. High IV percentile, low RSI, tells you stock is sold off right now, trying to bounce higher. Positive gross margin, that tells you, these are good companies making good margins, and positive sales growth, they're growing top line, and low debt. These are the great candidates to sell put options, so that way you don't get burnt out by looking at some weak links. So with that, let's jump in here. These are the great stocks, as you can see here. We got Pinduoduo, Sanofi, VMware, and so on and so forth. These are great candidates. We look at these some of these here and go from there. As usual, look at the volume here. Whenever I have here volume highlighted in green like this, that means volume is twice the normal volume. And the moment it's just a green font, that means volume is at least 1.5 times more than the normal. And whenever it's a red, that means volume is dropping off a little bit. So probably it's not a good idea to go after those candidates. So here you see great stocks that you can sell put options. We look at few of these examples. And next we got few more here, great stock to sell put options. As you can see here, we got our favorite stocks like Merck. We got EA, which is a great one here. Cerner, PayPal, JNJ, great stocks. You could sell them put options and make some money that way. As usual, keep watching the stock to the high volume here, like Zoom zoomed higher on Friday because working from home is back for some more time. And we got a few more names with a high volume here. We got Anaplan, that's a great one. And we got Lyft here, that's also doing well here. And we got Logitech, which is one of my favorite at these levels. And with that, let's jump in and start with a few ETFs and go from there. Let me go into Thinkorswim platform from TD Ameritrade. As you look through here, we got futures market here. Futures are pointing to a little bit higher opening here. S&P 500 up 37, as you can see here. NASDAQ up 149, that's a good bounce here. And Dow Jones up 228, that's also a nice bounce here. And we got Russell 2000 up around 25 points. Overall, market is looking like a, doing some good uptrend here, at least a bounce from Friday's sell-off here. So with that, let's jump in here, look at some great ETFs where we can sell some put options here. I will bring up this smaller chart here and look at some of our favorite ETFs. For example, QQQ, which everybody knows, NASDAQ 100 ETF here. As you can see, a stock dropped off. RSI IV percentile is around 62. That's pretty high for QQQ. That's why I like to take advantage here, buy some put options. As you see here from a support level, we got some good support somewhere around 382 or so. That's when it kind of nice support level there. Or even if you want to go a little lower, you also get some good support level around 360 or so. With that, let's jump in here and look at option chain. So let's go to QQQ here, and we saw around 260, around 360 is a good support level. I like to go maybe, say in this case, 53 days out, that's not a big deal. So as you look through here, option chain, let's go somewhere here. So we saw 360, so if you want to go to 360 here, so we got right here, nice $6 or so option premium here. That's a good amount. So I know many of you don't want to take too much risk here, and same story, I also don't like to too much risk. So what I normally do is I'll go around probability of touch around say 30%. So somewhere here, that's a good price here. So there's a 30% chance that price will reach hit around 339 or so. So what we'll do is really we can do a spread here. We don't want to take too much risk. I will say 340 and maybe say 330 spread here. We can sell put options. It's called a vertical spread, and contain our risk level. We don't want to take too much risk. So with that, let's go here and sell some put option here. And we want the spread, so let's go back here and vertical spread. As you see here, I'm selling 340, as you can see here, and let me buy back 330. So let's see how much money we get for that and go from there. All right. There you go. So we're taking a $10 risk here. For $10 risk, we're getting in $88 credit here, which is good. Let's do one thing. Let's take a $15 risk here, so that way we can get some more money in instead of 330. Let's say 325. So look here, this is a good amount of money. We don't want to be too greedy here. That's good enough. So as you can see here, I'm selling a put spread, $15 wide, also called vertical spread here. And my risk or maximum loss is 1,377. That's when the stock goes below both my strikes here. It goes even below 325. That's when I lose my maximum amount here. My break-even point is 338 here, which is much lower than the current price of the ETF here. I feel comfortable about this. I will go ahead and send it. So this is where you take a defined risk type attitude here, so that way you don't lose too much money. I would confirm and send this. It's a good deal. So if you are if you have a little bit larger portfolio, one more technique that you can do is really you can go further deep in the money. So for example, currently stock price is 391 or ETF price. You could go maybe $100 down here around 295 and sell a naked put here. This is where you got to be a little more daredevil type person. You could do something like this here. I've done it many times. You could sell this here and confirm and send. So as you can see here, now your maximum loss is much higher, because it's not a defined risk strategy. Your buying power effect is 2,960. You're basically betting QQQ currently at 391 will not fall below 293, which is around $100 below the current stock price in 53 days time. So this is one strategy. A lot of people use this, but if you're not comfortable, look at the defined risk strategy that we have done earlier. So you could do same thing with the other ETFs. One of my favorite is even SMH, which is a semiconductor ETF here. As you can see here, if you go back to the chart here, elevated IV percentile, as you can see here, 56. As you scan through here, good support level could be around 274, 275 level. We could go back to our option chain and see what we can do here. As you look through, 53 days is good enough for me. And let's go here and look at around probability of touch around 30 here. Look, 255, 30% probability of touch here. You could look at something like this. Right now stock price is around 299. You could go 255 here, and if you want to take a $10 wide or a $15 wide spread here, you could sell a credit sell a credit spread here and say I want vertical spread. Right now I'm selling at 255. I will buy back at say 240. That's a $15 wide spread here. So to take that spread, you basically earn the money, $1.38 here. You could confirm and send. It's a good deal here. As you can see here, you're selling a $15 wide spread here in your favorite ETF, which is semiconductor ETF, SMH. And for that, you're collecting good amount of money here, $138. If SMH stays above the current strike price, which is 255, that's where you sold. This entire money, 138K, is yours to keep. So it's one of the good deal here. You could confirm and send. And if you're a little daredevil, like many folks are, you could go even deep in the money around 230. Currently ETF price is 299. You could go 230 here and collect the probability of touch is really 13%. There's a 13% chance price will hit 230, which is a good enough probability that it may not hit 230. So you could do a naked put sell here at 230 here and confirm and send. As you can see here, the max loss, it's much higher because it's a naked put here. But there's a high chance that you'll make more money here. A lot of people do something like this, but if you're not comfortable or if you have a lower account size, go with the defined risk strategy that we have talked about earlier. So with that, now let's jump in and look at few stocks. As you look through here from a stock perspective, let's go here. Look, we got few great stocks here like Pinduoduo. If you're not comfortable with this one, it's a Chinese stock. I would skip this one because some folks who don't want to take risk. As you see here, this is dropping like a like a bag of hammer here. Instead, you could look at some little more better candidates. For example, VMware is trying to go higher even when the market is dropping. That could be a better candidate. We can see if we can make some money with VMware. So as you look at VMware here, stock is trying to make some bounce here. Good support level could be around 109 or even 100 for that matter. So right now stock is at 121. We could go here to the option chain, and 53 days is good enough. And as you scan through here for $100, so you make some 70 cents here, not a bad deal. Or you could look at around 27%. This is also good enough. You could sell this naked put if you're a little comfortable here, and make $90 here. And if the price stays above 102 here, by the time by 21 Jan, you got to keep this money. So you could confirm and send this. You make $90. You have max loss of 10,000. 170 means you get to buy the stock at 102.6 here. It's a good enough strategy. You could confirm and send this. But if you're not too comfortable with this, you could also do spread like we talked about. For the spread, you could even go a little higher, maybe 105, and you could do 105 and maybe 90. That could be a $15 wide spread. You could do that. So sell a vertical spread here. You're selling at 105 and you're buying back at 90. So it's a $15 wide spread. You're taking 42 cents credit. Not a great deal. I would pass this up. Not a good use of our time here. And you could look at other great stocks. I love stocks like CRM, Salesforce.com. It's a great stock. You could look at Salesforce.com and then probably wrap it up. So as you look at CRM here, let's also bring up this quick chart here. Nice looking company, Mark Benioff, legendary CEO. If you look here, there could be nice support level, maybe say around 272, or if you want to be conservative, even 251. So let's go here and look at the option chain here. So as you look through here, around 251 or 250, nice $5 credit here. That's a very good. But if you look at the probability of touch here a little higher, if you want to do naked, I would say go with around around 26%. That's good enough. Or you can be even conservative. You sell a put option at 210, collect some good $1.52 here, confirm and send. I think it's a great strategy here. I love CRM or Salesforce.com. You could confirm and send and collect nice $152 here. If the stock stays above your strike price 210, there's a high likelihood of this happening, which as we saw here around 27%, or actually 16% chance price will not hit your price here. That's a good enough odd here. You could confirm and send and take it from there. But if you're a little conservative, want to define risk strategy, I would say go with the 230 and maybe 210 type spread here, good $20 spread. So you could sell a $20 wide vertical spread here, 220 and 210. There you go. You collect $1.20. Not a big, not a. It's a good amount as you can see here. So you take a $20 types risk here. That's why 1880 is your max loss here. You make a nice $120. You could confirm and send. Even the amount is not great, but you have more probability of success. That's why this strategy is very, very, very popular. So with that, probably we'll wrap it up here. With that, thank you very much. Happy investing and trading. Please subscribe.